7:37, time to focus on business. Our business editor, Mike Eppel, joining us now. Mike, we're all waiting to hear what the Bank of Canada decides to do this morning.
This is the first time in a number of years, Ted, that we don't know exactly what the Bank of Canada has in store when it comes to interest rate policy. Before that interest rate surprise that we saw in January, where they cut the overnight lending rate 0.25% to 0.75% on the benchmark lending rate, the central bank had always telegraphed to the market what its intentions were. This goes back to several previous Bank of Canada governors. But Stephen Poloz took a different tact in January, cut rates, a surprise to the market, trying to drop the value of the Canadian dollar, a shock to the economic system to counteract what is expected to be the shock to the economic output of the country because of the falling price for oil. So the bet right now, 50-50. Do they cut rates again, hold the line? Some analysts said because of the central bank's tactic last meeting, they should actually reverse that and raise interest rates and admit their mistake. That's not going to happen. Nevertheless, it plays out into the mortgage market. We've seen mortgage rates drop to near historic levels over the past month's time, and this has played into the real estate market. Of course, in Calgary, we saw that big slowdown in overall real estate sales for January. Some numbers in from Toronto, though, the city almost matching Vancouver when it comes to overall prices. Vancouver, of course, hit the $1 million threshold for detached homes several years ago already. Toronto, this February, according to the Toronto Real Estate Board, hitting $1 million for a detached home in the 416 area code. First time I've ever seen that, and up substantially year over year by almost 9%. There's no homes for sale in the market, and lots of buyers, in many cases, bidding wars underway. All comes back to mortgage rates and economic confidence. We had news in from ExxonMobil, the world's biggest energy producer, this morning. They're cutting their capital spending plans by 12% to $34 billion. Still spending a lot, but a $4 billion haircut or thereabouts. Price for oil in the spotlight today, Ted, because it's inventories day for the U.S. Department of Energy. Expected to show more supply, but maybe not as much as previous weeks. So maybe a little stability there coming to the oil market. Ted, back to you.
All right, good stuff. Thank you, Mike. That's our business editor, Mike Eppel, reporting this morning. You can hear Mike, by the way, on 660 News at 26 and 56 after the hour.